Hello everyone. Let us start one more case study. This case study also from Mall Test Paper of May 2024 attempt series 2. Can we start a discussion? Yes sir. So this is case study number 30. So DF Limited is a globally diversified business conglomerate with operations spanning across various business sectors worldwide. The company adheres to Indian accounting standard for maintaining its financial record and annually releases its financial statement. As the finance team progresses toward finalizing the financial statement for the fiscal year ending 31st March 2003, the team is stuck up in the accounting of the following transactions. Let us read. On 1st June 2002, DF Limited decided to dispose of the business and the current and non-current asset of one of its divisions related to specialty chemical business which it had acquired several years ago. So this has become a disposal group classified as held for sale. It is a question of that particular chapter. The disposal does not involve DF Limited withdrawing from a particular market sector. The carrying value on 1st June 2002 of the asset to be disposed of were as follow. Because they have given carrying amount of all the assets: goodwill, PP, patent and trademark, inventories and trade receivable. So inventories and trade receivable will be part of disposal group but will not be covered under Ind AS 105. Correct? The total is coming how much? Check. The total will be 38 plus 25, that is 63. So carrying amount becomes 63. None of the assets of the business had suffered impairment as at 1st June 2002. At the date, the inventories and trade receivable of the business were already stated at no more than their recoverable amount, means it is already accounted and measured as per respective Ind AS. DF Limited offered the business for sale at a price of 46.5 million. So this becomes fair value, which was considered to be reasonably achievable. DF Limited estimated direct cost of selling the business would be 5 lakh, which is 0.5 million. So this is cost to sale. The fair value less cost to sale will be 46 million. These estimates have not been changed since 1 June 2002, and DF estimate that the business will be sold by 31st March 2003 at the latest, means it can be sold within 1 year from date of classification. So 63 minus 46, what is the total impairment loss? 63 minus 46 is equal to what? 17. Out of 17, first impairment loss will be allocated to goodwill, so entire 10 will become nil. 7 will be allocated to PP and patent and trademark in the ratio of their carrying amount. So balance is 7, so 7 will be allocated to PP. How much? That is 20 divided by 28, means 5. 5 will be allocated to PP and the balance 2 will be allocated to patent and trademark. So this will become 15. This will become 6. Understood? Have you understood? Yes sir. Come to the next point. The government provided DF with a grant of 21 million to assist it in the development of the factory. This grant was provided in two parts. Rupees 6 million of the grant was a payment by the government as an inducement to DF Limited to begin developing the factory. No condition were attached to this part of the grant. Similar type of MCQ, similar type of para already we have done in our previous case study. Taken, and that question actually I have taken from GFRS material. Rupees 15 million the grant related to the construction of factory at a cost of rupees 60 million. The land was leased, so the whole of the 60 million is depreciable over the estimated 40-year useful life of the factory. So in the first, there was no condition, therefore the grant will be immediately transferred to peer as per Ind AS 20. Second was for a depreciable asset, therefore the government grant can be either deducted from the cost price of asset or can be treated as deferred income, which will be amortized over the useful life of the asset in the ratio of depreciation. Correct? Yes sir. So let us come. Compute the value of specialty chemical division goodwill at a date of classification after remeasurement. The answer will be C. Option number C is correct. Calculate the closing balance of specialty chemical division asset PP. So we have already calculated what is the carrying amount after classification, that is 20 minus 5, 15. The answer will be 15 million. So option number D is correct. Yes sir. What will treatment of grant of 15 million related to construction of factory at a cost of 60 million? So answer will be what? Let's see. Rupees 50 million grant in respect of plant and equipment should be recognized immediately in the income statement since the company is certain to build a factory. What is this? Correct now? Of course not correct. It cannot be recognized immediately in PL. Deduct the grant received from the cost of the asset and depreciate the net carrying amount over the useful economic life. This is correct. So the grant as deferred credit and leave the initial carrying amount of the property at 60 million. Thereafter, deferred income would be released to the income statement at the end of 40 years. This is not correct. So this is not correct. My first part of this option was correct, but the last sentence is not correct. So this is also not correct. 0.375 million is credited in the first year in the income statement over 40-year period as a deferred grant income. So what they have done, you can see the total grant was 15. 15 divided by useful life was how much? 40. So 15, 1 minute. We are discussing this point. So 15 divided by 40. How much coming? It is 1 minute. 15 divided by 40 is coming how much? 0.375. So they are allocating the government grant as a deferred income in SLM basis. So this is also not correct. So option number B is only correct. Option number B is only correct. Chalega? Yes, sir. What will treatment of grant of 6 million received from the government grant as an inducement of DF limit to begin the developing of factory, because it was without any condition, so it will be transferred to PL immediately, credited to PL immediately. The grant relating to inducement to begin developing the factory can be recognized immediately in SOPL. This is only correct. Now B, C, D you are not supposed to read. If you want to read, read it. Chalega. Let's see what is that option given. So 1 option number C is correct, 2 option number D is correct, 3 option number B is correct, 4 option number A is correct. All the options are correct. Got this point? Yes, sir. So this discussion is over. We'll meet in the next video with the next case study. Till then, bye bye. Enjoy your study and keep studying. Bye bye.